Hi guys, this is Andrew for trendlines.com, and today I want to do some technical analysis on the techs. So Tesla, Apple, I think those are the most hot, like the hottest stocks in the market, in the tech market at the moment. And Tesla, who is making a very strong move up after some rumors. It's not rumors, it's that after it was said that it's going to enter finally in the S&P 500. So it was up like I think 12% 2 days ago. And Apple, that is just leading the S&P 500 for a very long time with a market cap of more than $2,000 billion, guys, more than the French GDP. You know, it's biggest than most of like the European markets, countries by countries. It's just insane. This is one stock, guys, bigger than most of Europe indices. All right, let's get into it. So Tesla, we start so on this kind of stocks, so you don't have much data, and the move is just exponentially higher. So we need to be in a log scale, guys. Always to be in a log scale. Otherwise, it just doesn't make sense to look at it. All right. So here, what can we do in this kind of crazy and standard move? The only thing we can use here, so trend lines won't be very efficient. So on this kind of stock, you always need to be in a logarithmic scale. Okay. So you don't have that much data, and the move was just crazy up. So first we look at weekly charts. And we are kind of trying to know if this move up that we are having here is finished or not. Sorry, this move up here. So let me go to the daily. We want to know if this move up is finished or not. All right. So the move up that has started in May 19, is it finished or not? So we only have one thing we can use here is so Fib extensions. I'm going to show you how, but Elliot Wave principle. Once again, for those who don't know what is Elliot, just subscribe to the channel and click on the link below and subscribe to my newsletter. You're going to receive a free video where I explain everything about Elliot. All right. So basically moves up develop in 5 waves, as we know. So here we're trying to find 5 waves up. Okay, so up, here we go. And to me, it looks actually that the move that has started since March lows. So 1, 2, 3, because the 3 is the most kind of extended one. So I could put the 3 at a different place. That's true. You know, I can do like this. This would be a valid count, but then if this was true, we would have here a correction, which we don't see. All right, we see the market trading higher. We see the market quite strong and supported by a lot of buyers. So this looks to me like if the 5th wave were done, here we would have had a zigzag, all right, or a flat correction or anything. This, all right, this could look like a flat correction, but I'm sorry guys, but this is going higher. All right, this is going higher. Even the MACD is going lower, so we have kind of a divergence here. This is not corrective. This is not the end of a strong move up like this. So I rather believe that we're having something like this, and that we are still in our 5th wave. All right. So the kind of target we could have here. So for this, I'm going to use Fib extensions. All right. So Fib extensions is just telling me that the next wave has like a relation with the wave before that was in the same direction. So here I measure, for example, so I'm going to do Fib extension from the 3rd wave, which was the last bullish wave, to the 5th wave. So I take like this, I do like this, all right? And here, if I measure the 3rd wave and I apply this projection to the 5th wave, so I need to find the bottom of the 5th wave, which is here, then I have this, all right? And this is giving me actually very nice levels. And for example, the most likely one is the golden ratio one, so it's the 61.8%. So I think that if this is correct, then we're gonna have a final move up before this whole move up has been complete to the 600 level, and then we're gonna have some kind of correction that would lead us probably. So let's get rid of this. Sorry. Okay. So I'm going to use Fibonacci this time, retracement and not projections. All right. So from here to here, if I'm correct and we go to the 600 level, then the correction would lead us to the 50%, 315, for example, but we already corrected here last time. So maybe we would go to the 61.8% retracement. So I don't know, this is very bearish, but those are the levels that I would actually target if I took a short position starting from 600. So this would mean that Tesla had some issues because this is a massive loss, a massive drop, but this is how things work, all right? When you have such an extended move, it needs to correct. So one day or the other, I think we might see these levels coming. All right, let's go to Apple now. Apple is very interesting because we have more data. You know, this is a leading stock of the S&P 500 for a very long time, and I think it's interesting to look at what happened for. So once again here, okay, I'm already in a logarithmic scale. I need to do this, otherwise the chart doesn't make sense. And so here I can analyze the move that happened since before the bubble, the tech bubble burst in 2000. So once again, for this kind of stocks that are just crazy on the upside, you can't really use trend lines, you know, because trend lines are for linear moves. For exponential moves, you need to adapt. And what do we have? We have Fib extensions and we have Elliot. All right. So here I'm going to use Elliot wave theory, and I'm going to apply this to where I think this is the beginning. So it looks like here we have a beginning. All right, because this is not really something we can have a nice count, but here we can. This is flat, all right, for like 20 years. This is going up. So Elliott waves work very well for markets that have growth, you know, because it's just telling you that the markets, that growth follow patterns, all right? Like you can see in the nature, you have a lot of fractal patterns everywhere in what is growing. For example, trees, shells, flowers, so on and so forth. So everything that is growing develops into fractals, and Elliott wave principle is very nice to kind of measure all this development. So here, this is what we're going to do. We're going to measure this. We're going to measure how Apple grew in the past 25 years. So this is a 1, no doubt on this. Then zigzag, 1, 2, 3. This is a 2. Then the third wave, where do we put it? Should we put it here? Should we put it here? Should we put it here? Nobody knows. But I have some clues because the third wave is the most impulsive one, all right? It's the strongest one, the most impulsive. So where do you see things fading here? I think that this is very impulsive, but it's not long enough, all right? If I put it here, it's longer than the first, but not that much. If I put it here, then it's actually longer, still very impulsive. So I think this is correct. I could put it here as well, but then I lose, strength. It's the slope of my growth. That basically the growth is lower. So a third wave has a very strong growth. So I would put it here. I would put my 4 here and my 5 somewhere here. I don't know. Finished or not, let's see. So this is on the monthly. Then what do I want to know? I want to know if the 5th wave is finished or not. So I go to the weekly. I go to the weekly and I'm going to try to kind of see if the 5th wave is done or not. All right. So to do that, same thing again, starting here. So 1, 2, 3, 4, and 5 somewhere here. Let's put it a different color. All right, so here the third wave is definitely not the the strongest, so I'm not very sure of this count. Maybe I would change it later. Maybe actually we have a third that is here, a fourth here, and a fifth there. That's possible, but I'm going to show you why I did this, why I think it's like that. Because look how, so then I zoom in again, I go to the daily. So again, we applied the top-down approach. We start from the monthly time frame and slowly we go to the weekly, daily, hourly to understand where things coming from, you know, to have a global view of what is happening. And then, so here, this is my fifth wave. And this one, I put it here actually because I have checked this before. And I saw that here we have a 1, 2, 3, 4, 5. That is beautiful. All right. So when you have something beautiful, something obvious, you need to take it into account. This to me, because, okay, why? You're going to ask me why I didn't put 3 here and something like this. It's not a valid count because this, in a third wave is impulsive. This is corrective. All right. You cannot put the COVID crisis inside the wave, you know, for sure. This, especially not in a third wave. So this cannot belong to a third wave. This must belong to a fourth wave. All right. That was very corrective. By the way, this, you can see, this is not an impulse. It's a diagonal. And diagonals usually occur in the final move of impulsive moves. All right. It's a diagonal. Why? Because in an impulse, and once again, I'm explaining everything about it in my video on Elliot Waves that you can have if you just subscribe to my newsletter. Here, bam, has it crossed? I'm checking if the fourth wave entered wave 1 territory because this is not allowed in an impulse. And so this is not an impulse because here enters this territory. Here it trades below the top of wave 1. So this is a diagonal, and diagonals usually occur in the final moves of extended moves. All right. So guys, this all makes sense to me. So what I'm saying then is that it looks like we are in a fifth wave of a fifth wave of a fifth wave of a 25 years move up that would correct probably quite badly. Let's be honest. But is it finished? Once again, let's go to the 4 hours time frame. So now I want to know if the fifth wave here is done. So I put it too far. Okay, so this is my fourth. And does it look complete? This one, does it look complete? Can you count 5 waves? Let's try. So I can do 1, 2 or 1, 2. It doesn't really matter. This is definitely a 3. All right, because it's strong, it's clean. Okay, you can do like this. But then once again, this is not corrective enough. Like for Tesla, like we said for Tesla, after this, you need to have something quite bad happening. This looks like a 4, all right, to me. It looks like here we have third wave. Okay, and this looks like a 4, like a triangle, some kind of triangle, descending triangle, like we saw last time on, I don't know if it was Euro dollar or JPY up. Okay, here you have this triangle, nice triangle. And so if we break on the upside, it's probably going to confirm that we have a fifth wave coming. And if it breaks on the downside, then we need to redo everything. But I think it's going to break on the upside because I'm bullish on the equity for the coming month. So I think that we have one more move up to come. One more move up. We're missing the fifth of our fifth of fifth of fifth. So we need to see how this is gonna play out, but I would have a target. So once again, fib extension. I measured the third wave, I applied to the fourth wave, and I take the golden ratio. So 150 is my level on Apple. 150 is my level for Apple in February. I think the S&P is going to be at 3750, somewhere around here, and Tesla at 600, Apple at 150. Once again, nothing sure of this in this. If this is not true, then we have here a trend line that is protecting us. All right, this trend line is kind of protecting us. The moving averages are protecting us as well. We're trading above, so if we start to break the moving averages and the trend line, guys, things are going wrong. Probably there's going to be a rush for dollar, equity are going to go lower, and then we need to reassess everything. But we're not there. We're bullish for now. Even if yesterday was a bit bearish, I think that is just correcting a little bit, and we're going to go finally up. All right, if this happens, where are we going? I don't want to scare you guys, but we need to have a look at it. So to do that, we're going to retrace this whole move up, and we're going to retrace it where? To the golden number of Fibonacci, as usual. So I use Fibonacci. Where is it? Here. I measure the lowest point with the highest point, which would be at 150 in this case. And where do we go? At 93 or 75. So those are my targets. If we have a correcting move, we're gonna probably go to so 75 means we're losing 50%. So basically it's gonna be like a strong move down on the markets. If Apple lose 50%, guys, things are not doing well. So maybe this is what is happening next year. I don't know. I hope not. I hope we're gonna be able to save the economy after this crisis. But we are very extended. We are very extended on a lot of assets. Even the Bitcoin is going crazy. You know, everything basically that you can put your money on and that had a return in the past years. We have kind of a lot of liquidity getting in. And this to me looks a bit like a bubble, but I think the bubble is not ready to burst. We still have some more upside, but one day or the other, it's going to burst. That's how things work. That's how bubble behave, actually. That's it for me. Thank you very much for listening. I hope you enjoyed this technical analysis on the text. I would do maybe commodities next time. And if you guys have some positions on this, be very careful. My advice are only my view, but what I can tell you is use a tight stop loss. So you're gonna be safe and stay close to shore. I see you guys.